There's also expectation of more issuance of corporate debt securities, what you call the CPs and the CBs, corporate commercial papers and corporate bonds in the coming months as the government free up some space for corporate issuers to get into the game. Meantime, yesterday, EcoBank Research issued its own statement regarding what we're seeing on the debt market, and it went on to say, in part, that the decision to seize the open market operations auctions by the central bank is likely to cascade into a flattening of the Naira yield curve. And we see that already. We've seen almost 20% this year that government is paying as interest on treasury bills. Now we are seeing 8.58%. And that's quite massive. To the downside, means that is helping the financial position of the government. Now, you look at the EcoBank Research went on to say that increased duration buying by pension funds is likely to drive yields further into negative territory in the near time. When pension funds buy massively because they have to, now when they buy into the long-term, long-dated bond and treasury bills, that will flatten yield a little bit further. Nigeria is one of the places on earth where you earn so much more by just holding government securities. But this will have some implications moving forward for a few folks on Broad Street, the banks in particular. Let's shelve that discussion for another day. EcoBank Research also expects a bulging maturity profile over the rest of December. That's where we are. 270 billion will mature in the next few days in the OMO bills, and the FARC inflows will drive strong declines at the short end of the market curve. So what's the outlook on FX? A policy rate to be more precise. EcoBank says they're expecting central bank policy rates to turn positive in real terms with increased comfort over Naira outlook likely to drive further central bank reluctance at curbing Naira liquidity. All that most likely will be happening in 2018. So what would you be doing if we are local investors? How do you profit from this? Local investors are likely to front-load their purchases of Naira debt, which would cascade into further yield compression in the near term. That's it, isn't it? Yes. So let's get a bit into we have about 2-3 minutes. Let's review the market. For you, let's start with how to put all those long grammar and market terminologies into the numbers for you. The stock market made a very gentle recovery on Tuesday, 0.03%, not as aggressive as we thought the market would be, but well, we're still in the positive region. We've had a decent 2017 so far. Look at the stock market. Let's start with the numbers. We're still holding on to our 38,900. We lost the 39,000. Some of us were hoping for a 40,000 before Christmas. That may happen. It may not happen. I don't know. But where we are as we speak was that the stock market had a gentle soft landing on Tuesday. And in terms of volume, we're less than 500 million. That means the appetite for buying is slowing down a little bit. You know, one of the reasons, isn't it? Yes, because the treasury bills and the bond market is piping really, really hot. Investors are balancing their portfolios very quickly. I think they've done enough of stocks. Now they've moved to the other side of the street where you have treasury bills and Naira bonds. In Naira value, 26.8 billion Naira. We did about 5,090 transactions at the stock market on Tuesday. Okay, let's take that away and look at the sectors. This is where investors are taking some profit right now. The banks lost about it's a little over 0.1%. Consumer goods gained 0.27%. This is the season again for consumer goods. You know that schools are going on holiday, kids are going to be home and up and around town. So they're going to be consuming non-alcoholic beverages and all those other things, and pastries and what have you. So you expect consumer goods to do well at this time. And for those who are already going on the year-end holiday, the consumption of bottles and other consumables increases at this point in time. So the consumer goods always have a nice time between the seasonal period, you call it, between now and January. Then you have the industrial goods are tapering a little bit, 0.29%. That's where you have the folks with the hard rocks there, the cement, the construction, and the rest of them. Then insurance followed their cousins, the banks, into the negative territory, almost 0.3%. Oil and gas. Hold on a second. I think we have a little problem there. The insurance should be in red. Yeah, that's a negative 0.27%. Oil and gas was also down 0.4%. 0.6%. So let's close over to the NESD. That's where you have the National Association of Securities Dealers. That's what the NESD stands for. Over the counter. That's your OTC. That was unchanged. A very quiet day. Investors seem to be heading for a holiday early. The NESD OTC. So you may see things a little bit lackluster between now and the rest of the year. But in terms of volume, I'm taking a particular notice of that. If you flip that page over and you look at the volume, 9.11 million unlisted securities traded Tuesday. That's a bit of some position in there. No movement of prices, just change. Stocks just change hands. And then finally, I'm taking a quick look at the oil and gas stocks. Can we run through this very quickly in a few seconds? Yes. W11 PLC was down. Eternal Oil gained 3.86%. The rest of these oil and gas retailers, energy traders, and maritime oil and gas maritime services company were largely went to sleep on Tuesday. Wake up to Wednesday. Let's discuss Buhari's debt strategy via his debt managers when we come back after the break.